Well, welcome back, everyone. It's been a storied week in markets with the trade war woes lessening and a gap up on Sunday night. Let's get a zoomed in view of the S&P E-minis over here. We gapped up on Sunday night. We ground up, held up, got the FOMC policy statement, which was not a positive statement at the end of the day, removing some of the or lowering some of the odds for a December 10th rate cut. And then we saw on Wednesday this week, Microsoft and Meta not deliver enough, but Google did. We saw that resolve to some negativity in markets yesterday, and that was October the 30th, coming down for the primary market into the gap fill area, but not filling the entire gap. But in today's market, after yesterday's Amazon and Apple results, we did see a market that started off stronger, pushed up, tried to get above the center of that linear regression channel going back to April the 21st. We're still in the lower half, however. The NASDAQ has been the dominant force on the day, but it has not been able to get the S&P back up above its volume point of control for the week, which is effectively that 69.06 area. Getting above 69.06 and roughly half a point opens the door for the market to stabilize and potentially go higher. However, while we remain below, a continued weakening has potential. Now, we did come down, make a slightly lower low than we saw in yesterday's market, coming down to a low of 68.43 and a half a point, where the October 24th intra-session high was 68.41 and a quarter of a point. So we've roughly filled that gap, and that opens the door for, if the NASDAQ wants to be able to give us that strength and that showing of strength coming from Apple and the surprisingly strong results from Amazon, if it wants to show us that strength, it needs to get back above its volume point of control for the week, and that's all the way up here in the 26,182 area. Now, a pattern that we've been dealing with all day coming into today using the Triple S toolkit is something that I expounded on with members in the active trader room. We went down to the 1 hour chart that looks out 3 to 6 hours. We went back in time to try and identify where the Triple S slow momentum line typically has topped out going back to the midpoint of this year. And we've identified it at an area of about 55 to 57. That's the blue line, the slow momentum line. And we went back and calculated what the size of the drops have been outside of the two exceptional drops. There was a couple of exceptional drops, July the 31st to August the 1st, and of course, October the 10th. But beyond those two that delivered more than a couple of hundred points of a drop, well, we saw drops of anywhere between 90 to 140 points on the primary market. But what we also saw as that was happening was a push back up for one more higher high or retest of the highs, which would be very common. And that would be the Triple S red line coming back up above the slow momentum line, having one last hurrah before the party ends. And that's something that I gave members of the active trader room this morning as an insight and folks on WealthCharts as an insight. And it's something that is still in force. Effectively, if you take a look at how price action has been performing from a signal standpoint, we have been in a sell signal state on an hourly chart for quite some time now, going all the way back over here to the 30th at 2 a.m. Eastern time. We have confirmed a sell signal using the Triple S tool on a 4-hour chart as of the last close bar. However, the market is not willing to unclench. It's come down. It's effectively filled the gap on the primary market and has now started a retrace back up. That retrace back up is very common when we take a look at historical patterns on that 1 hour chart, which is all important for those that are making decisions over the course of the balance of the day and, of course, Sunday night, Monday morning. So we're in that move. It does not have to remain in place, but it is statistically significant and something that is attempting to really entrench. As we can see on the 5-minute chart, we've entered a buy signal state. We've been in a buy signal state on the 1-minute chart for quite some time as of the pre-trade conditioning on the Triple S tool over here. Now, using this tool, we're able to understand the the playground that the market is likely going to roam around in during the day. And then, of course, use the intraday signals to help us with better decision making. Now, I did a class this past Wednesday that got rave reviews and folks want more. So I am coming back tomorrow, Saturday, November the 1st at 10 a.m. Eastern Time, 9 a.m. Central Time, 7 a.m. Pacific Time to do the class again. I'm going to bring in some fresh examples of course, the market since Wednesday, and we'll do some live trading using the live WealthCharts incredible trading simulator and get really deep on the trigger tactics to get into positions, manage them along the way, and of course, manage them on a multi-time frame basis. If you enjoyed the insights in this video, enjoy the insights that you hear me providing day in and day out here on WealthCharts, in the Active Trader Room, and in videos just like these, well, it's a do not miss session tomorrow. It's not a recorded session. It's something that you've got to be there live for. I'm taking time out of my weekend, and I hope to see you there tomorrow. It's going to be about an 1.5 to 2 hour session. Looking forward to seeing you there, providing you with education, insights, trading tactics that are must-haves in the type of market that we're in right now. Have an incredible rest of your day, and happy Halloween to those celebrating. We'll see you tomorrow morning, Saturday, November the 1st at 10 a.m. Eastern Time, 9 a.m. Central, 7 a.m. Pacific. Have a wonderful rest of your day, and thank you for watching.